Perfect. We are opening up, and so people that are signed in and attendees are already starting to show up. Hi, everybody. Welcome. It's Mike Pownall here from Oculus Insights. As people are signing in, we'll just give them another couple minutes for people to sign in. What would really help us is, as you're signing in, to help you get to know the Zoom screen, you will see on the bottom of the screen a chat button, and you will see a Q&A. So what I would love if everybody could just sort of write down what country or what part of a country you're from. That just helps us to know where our audience is from. As we're going on in the presentation, and I'll introduce our speakers momentarily, you'll see another button that says Q&A, and at the bottom there, and just if you have a question, I'll be collecting, I'm gonna be the moderator today, I'll collect the questions, and when our guests Danika and Sheila are done, we will then have an opportunity for a question and answer. What I'd like to do is invite Sheila and Danika. You can turn your cameras back on, and we can start with introductions. Welcome, welcome. So it's a couple minutes after 3. People are still showing up, and it's amazing. We've got people from just down the street from me in Ontario to all the way to Switzerland, to Texas, and to California. So what a great large group of people here. So as I said, if you just, when you sign in there, just type in on the chat where you're from or what city you're from. And if you have a question, just type it in the Q&A button. And then when we're done our presentation, we'll get into the question and answer period. So first of all, I wanted to introduce Sheila Stork. Sheila is one of my colleagues at Oculus Insights. I've had the pleasure of working with Sheila with some of our clients, and Sheila is a LVT, but Sheila is absolutely amazing at just processes and just business flow and how a business should run the operations in terms of the veterinary aspect. So I've had a great pleasure of watching Sheila work on some great practices and really improve their processes. And I'm also really proud to present Danika Kent-Doso. She's the Executive Director of VMI Resources, and her expertise, specialty is on inventory management. And we work very closely with VMI. And so Danika, welcome. And maybe if you just want to say a couple words about VMI before you start your presentation.
Yeah, sure. VMI Resources is a management company. We're based in Texas, and VMI Resources was created to oversee a group of veterinary hospitals called Brazos Valley Equine Hospitals in Texas and Brazil. It started as a single practice, and as it started to grow and expand and become multiple businesses, they created VMI Resources to manage and provide some oversight. So there's some different components to VMI Resources. There's HR and accounting and inventory, of course. So I'm in the inventory side of things, and we've just been kind of rolling along and expanding as the years go on. So it's been really fun to see all the different projects that pop up and how things evolve over time and how the industry has changed even in just a few short years. So in a nutshell, that's what we do, and that's what I do.
All right, well, let's carry on with your presentation on inventory principles for a healthy veterinary practice.
All right, well, thank you. Thank you very much, Mike and Sheila. And Thank you to everybody who's jumped on today. There are no shortage of webinars these days, and so I appreciate you taking the time to join in our discussion. We're going to talk about a few key things that you can implement in your practice to lay a foundation for successful and effective inventory management, which of course translates to cash savings, better margins, and overall increases the value of your business. We're not going to go deep into detail on any of these things because it would be a week-long webinar if we did, but it's going to be more of a touch and go to give you some things to think about to maybe start to tailor a plan for your own practice. So we'll just get started and let's see, there we go. In my experience, there are 6 bricks in the foundation of inventory management. Establishing benchmarks, finding the right person for the job, identifying black holes, collaborating and communicating, building a plan, and setting parameters. These aren't independent, standalone bricks per se. There's some overlap and they do support each other, which you'll see as we start to work through these. So we'll jump right into establishing benchmarks. These should be hard and fast numbers that you can measure against over time. This will help you evaluate the progress that you're making toward your goals, and they should be formulas or functions that don't change. So a standard is the cost of goods sold. 25% for a cost of goods sold is the industry average, at least in the United States. And I apologize right away for my lack of scope in Europe and Canada and anywhere else, but Mike or any of our attendees might be able to share some insight here. As you know, incremental changes to cost of goods sold may seem small at first glance, but equates to a pretty significant movement on the margin. For example, a practice that generates $5 million in revenue with a expense line of 1.5 million of drugs and supplies spends 30%, it's a 30% cost of goods number. And bringing down the cost of goods just 1% would save them $50,000. Moving on to purchasing agreements, and I don't want to spend a lot of time here because this is particularly for those who own practices in the United States, and I understand it works a little differently elsewhere. But do you know what your purchasing agreements are with your vendors? And this is something that's really important. When you buy from a distributor, they're selling to you at a price that is marked up a percentage over their cost. And so the question becomes, do you know what that percentage is? And is there a rebate? If there's a rebate, are all products rebate eligible, or are there exclusions? Are you tracking and reconciling the rebates that you are receiving for your purchases in a given time period? You might be surprised at how often there are errors here just because of how messy the data reporting system is between distribution and manufacturing and some of the things that are actually out of your reach as a practice owner. But if you can track those internally and access that detail, it can help you go a long ways. And then we look at, another benchmark in the purchasing agreement realm is the terms on your account. Do you have 30, 60, or 90 days to pay? These all become negotiating points in your conversations with your vendors that of course affect your cost of goods. And then another really important benchmark is the turnover of your inventory. Do you know what your turnover metrics are, whether it's days to turnover or number of turns a year, or however you're measuring it, if you're measuring it in units or if you're measuring it in dollars? Basically, just getting a handle on your turnover can help you with so many things, from identifying overstock and expired drugs to and the wastage that comes from those things, to setting mins and maxes and reorder points, and just overall increasing the efficiency of your pharmacy. And this is a metric that is most commonly used as a benchmark in the practices that I work with, at least on the purchaser's level. Just because this is information that's pretty easily attainable by that individual. Whereas the cost of goods number can sometimes be a little less accessible for the person that's managing the inventory. And speaking of, to do these things well really does require a very dedicated person. And the more dedicated that person can be to inventory control and purchasing, the greater the health of your inventory in your business. It's a bonus if you do have somebody that's already in your business that might fit here, but it doesn't have to be somebody that's already on staff. I stepped into the purchasing role in one of the clinics in Texas from being a tech previously and doing that for a couple of years. So I had a really good understanding of of the drugs and the demand of different drugs in that practice. And that was absolutely an asset for me getting comfortable. But I've also worked with purchasers that come in from the outside and are really quick learners, and they do wonderful. So it doesn't have to be somebody within your practice, but the right person should be very detail oriented, very self-motivated, a problem solver that isn't afraid to dig into the data and the challenges that come up. Somebody that really cares about the health and the goals of your practice and is flexible to change as inventory management and strategies evolve. And probably the most important one, they have the time. Does that person have other roles in the clinic? This will affect things like your stock levels, for example. If they are answering phones and checking in clients and running anesthesia, or if they're out of the clinic entirely on farm calls, they're not going to be there to be able to make sure all the inventory is at the right level. So they're probably going to be purchasing extra and just giving themselves a little more cushion, which is going to show up in your numbers. I just try to remind practice owners that inventory management can really be a thankless job. And because, I mean, no one grows up dreaming about sitting in a pharmacy and counting drugs and policing their flow as they move through a clinic. So, you know, a lot of times the only things that they hear are, I need, or worse, we're out. And there's just a lot of weight on their shoulders managing this expense, which is, you know, the second biggest expense of a clinic most of the time. So if you've got somebody that's willing to take this on, the greatest thing that you can give them is your support. Your inventory manager can help you identify black holes. And this is a big part of managing inventory well, is finding out what these black holes are in your practice. When inventory disappears, because so does your margin, and it can really quickly go negative. And it can be kind of surprising when you start to look at the numbers, but it happens fast. It's a really slippery slope. So an absolute requirement here is accurate inventory software. And this means that all purchase invoices are entered, transfers are recorded as inventory leaves the pharmacy and goes to other locations, and as it's billed out of the clinic entirely. Once you have this data entered, your inventory software can help you generate reports that help you analyze these things. It can help you compare your purchases to your transfers to your sales and any number of other things. You know, hopefully it can help you analyze your turnover and just all kinds of different metrics. But your inventory software is only as good as the information that is input into it. So having the software is one thing, but having somebody that's dedicated to making sure all the important information is put in is the key there. And so when you look at analyzing the numbers and the data that's been put into your inventory software, you can look at things like comparing the percentage of your product that has been transferred to what has been purchased. So if you've only transferred 60% of what you've bought in a time period, you're probably overstocked. If you've only billed 60% of what you've sold, you found another black hole right there. So speaking of, and this is a pretty common one actually, whether it's intentional or unintentional, but some doctors like to give discounts, and that's okay, but do you know how much you're discounting? And is it in line with how much you want to be discounting? So having these numbers and having this information can really help you support that, but to do it with discretion. And are you billing at the appointment or at the end of the week? You know, there's just so many things that can happen. And it all comes down to just sometimes you don't know what you don't know, but accurate, up-to-date inventory software can help you bridge that gap immensely.
Danika, I have a question on that, and just because I think this is the billing at the time of services. I think as a veterinarian, that's a huge aspect. Do you have any data, or have you read of any data in terms of what percentage of items are missed if we don't bill at the time of service?
You know, I don't know of any published data on, you know, a wide scale. I just know that it's something that in some of the practices I've worked with, we've tracked over time, because like I said, you don't know what you don't know. And so an example I can give you is a practice that I started with. Their cost of goods was really high, and they were convinced that it had to do with what they were buying and how much they were buying and overstocking and paying too much and everything purchasing related. And so once I started digging into it, I knew that there had to be more to the equation. And I started tracking, like I was saying, what we bought and comparing it to what was transferred and where it was transferred to. and then what was billed for after those transactions. And there were huge discrepancies. And so when I do reports like that now, I kind of categorize it into, okay, 50% or more of this product wasn't billed. And we know you don't have that much on your truck or in your cabinet or whatever you're working out of. So I've got information on our own clinic level, but I don't know of anybody that's ever produced anything on a wider scale.
Okay.
But it was very eye-opening, and it really, it gave the clinic some information to reevaluate how they do things and to have better capture those things and support the doctors in billing at the time of service.
Thank
Does
you.
that answer your question?
Yeah, no, that's great. Thank you. 'Cause I'm just trying to give some tips for the people that are listening in. If they're listening to you, they're like, I want to know how much we do at the time of service. I just would love if you had any tips on how they would measure that.
Yeah, and like within our practices with Brazos Valley, they're all independently owned, sort of, but there's some that do a really good job of billing at the time of service, and their faults are elsewhere. And then you've got clinics that don't do a good job of billing at the time of service, and their collection numbers suffer because of that, because billing is so far behind sometimes. And so you can kind of compare one to the next and see the ramifications of some of the behavioral things that affect your inventory and your numbers.
And just before I'm just sorry to interrupt you. I just want to remind people, if you have questions, we're going to have time at the end for Q&A, and just type in your question to the Q&A button. We already have one question up there, and we'll get to it in a few minutes. Thank you.
Yeah, and please keep track of questions, because I know I'm rolling through kind of a lot of information pretty quickly, just because I don't want to take up all the time just listening to myself talk, but I want to get through some things that I think are pretty important and just, chewing on and spending some time with. But I'll keep moving. The one other black hole area that I wanted to talk about a little bit is, well, analyzing and reevaluating your costs. Just, excuse me. Basically, is your hospital as profitable as it could be? So money is more valuable as cash in hand than inventory on the shelf, but do you know how much money you have tied up on the shelf? Do you know the value of the inventory you have on hand? And that's not just in your central pharmacy, but in your other locations as well, in all your secondary locations, your treatment areas and your trucks and ICU and those different locations. Every single secondary location that is stocked with drugs is basically like another stocked pharmacy, and it really adds up quickly. Is everything that you're ordering necessary, or is some of it ordered just because it's always been stocked? And that's something to spend some time with your purchaser, especially if it's somebody that's new and stepping into the role and just trying to pick up where the person before them left off, is having a good understanding of this is necessary, and this is something that we're going to use a lot of, and this is something that doesn't need to be on the shelf. Or, if you've been to a convention or a trade show and there's a new product that you're excited about and you buy on it because it's on promotion, and then it sits on the shelf for 6 months. Those are just different things that they're little things, but they do add up and they tie up your cash, basically, is what it comes down to. Another thing is your markups to clients. So do you have inventory software that's calculating that markup automatically based on what you're paying? Or is this something you're doing manually? In either case, it's really important to keep tabs on it, because at least in the animal health world, our major manufacturers do a price increase sometime in the first quarter of the year, generally. But when you look at the human type drugs, those things change constantly and unpredictably, and sometimes by really big swings. So you really want to make sure that you're reevaluating those at least annually, more often if it's something that you're doing manually and not using an inventory software to calculate. Another thing are the supplies and the sneaky drugs, I like to call them. These are the things like in the supply realm, elasticon and syringes. Believe it or not, those often show up towards the top of a clinic's high volume drugs and supply list. And so you want to make sure that those are packaged correctly or bundled correctly in your billing codes, and those costs are recouped. And the sneaky drugs, those are the things like the sedation bumps or replaced fluids, or if you're on a farm call and you hand off a tube of bute paste to a client, Those are things that often are missed in the billing and are just really important to watch for. And sometimes you might have to set up a more targeted approach to keep track of those things, or recruit a little more help from your techs to make sure that those things are done. And then a closed pharmacy. That's not something that's always feasible for everybody, but if you can move toward that direction, even if it's just little steps, it can make a world of difference. And so especially like if you're looking at building a new practice and you can make that happen, please don't overlook it. It makes it so much easier to keep track of the drugs that you're paying for and make progress toward greater inventory control if there's not a revolving door. I'll go back to sedation again. If you've got open bottles of sedation in various places throughout the clinic, you know, that's a high volume drug and it's one of the biggest culprits I see in missed billing. Is it absolutely necessary to have multiple open bottles throughout the clinic? You know, or is that something you can keep locked down and keep a little closer tabs on? As treatments for inpatients in the hospital are prepared, usually those things are recorded to a T, but is it billed? This shocked me a lot when I started really digging into some of this, that hospitals in themselves, a hospital like location is often a black hole just in itself. Drugs are transferred into the hospital for clients that are there and it never billed, just disappears. So watch that one. Collaborating and communicating is so important. The practice owner needs to share information with the inventory manager and collaborate with that person on goals and targets. The inventory manager needs to know what you want to accomplish and why, so they're not flying blind or guessing or just overall being inconsistent with their management techniques. Sharing purchasing agreements, buying group memberships, your current cost of goods, your target cost of goods, etc. All of those things are really important to communicate fully with the purchaser. And this is going to be probably an ongoing conversation because it really takes some time to get a good understanding of what all these things mean, how they work, and how they affect the bottom line. And your purchaser likely has some goals of their own. Maybe not so much if they're just getting started and they're new, but once they've been there for a while and have gotten comfortable in their role, they're going to see some things just because of how intimately they're involved with your inventory. They're going to see some things that you probably don't or may not recognize. And so then collaborate and pick a few things. Definitely don't pick many. Pick one or two or three that you're working on towards the same goals, and so that you don't get overwhelmed or distracted or end up going down different rabbit holes. And we talked about this just briefly before, but your inventory manager really needs support from the owner as well as the staff to accomplish the goals that you set, particularly in the form of the time to be able to do the work that's needed and compliance to whatever the agreed upon strategy or approach is. I mention this because change is often involved when you're trying to improve your inventory control in a practice, and change can be really hard. So for example, talking about transfers again and stuff moving through a pharmacy, if staff is used to walking into a pharmacy and taking something off the shelf and then going on about their business, and you want to get a better handle on where inventory is going once it's unpacked out of the boxes and put on the shelf, you want to get a system in place to record who takes what and where. If they're not used to stopping and writing it down or reporting it in any way, it's not uncommon for there to be pushback on those types of things. And I understand because everybody's busy, but this can be really important, and this can really change a lot of things in the practice. So the pharmacy manager just needs your help in conveying that and being consistent with that. And once you've targeted a few goals, you use those goals to build a plan. And sometimes I'm a big believer, no matter what it is, that sometimes the best thing you can have is a plan. So once you've identified 2 or 3 goals, then with your inventory manager, you can start to build a plan to get there. And so a plan to reduce cost of goods sold, for example, is going to have 2 prongs to it. It's going to have a purchasing prong and an inventory control prong. And both of those things are not as cut and dry, black and white, simple. They're multifaceted in themselves, but we can, keep them pretty separate. This is purchasing or this is inventory control. And, plans to buy better might include a better purchasing strategy or comparing prices and pricing agreements among vendors and just simple negotiating. Your inventory control is going to be even more dimensional with things like organizing your pharmacy or reducing inventory outside of a pharmacy, or entering all the transactional data into your inventory software so you have complete purchase records and billing and transfers and all of those things. It might be generating a high volume drug and supply list and developing a system of counting and tracking those drugs, seeing what's going on with them, calculating turnover, setting mins, maxes, reorder points, billing support, all of these things. There's so many things. And so you just want to pick a couple of them to focus on and go from there. You just want to prioritize so that as you get things implemented, it's easier to take on new goals and new projects. And lastly, a set of parameters that aligns with your goals and the benchmarks you've identified is good to help stay in line with those benchmarks and measure your progress. So a system of counting is something that I consider to be very foundational in setting your parameters for so many goals. Being able to compare what you have on a shelf with what your inventory software says should be on a shelf, for example, is the quickest way to find leaks in your inventory as it moves through the clinic. And it's a great way to build data to give you the most complete look at things like stock levels over time, turnover, etc. And so just some examples for using these metrics. Maybe your cost of goods is 32% and you want to get to 27, or maybe after your inventory manager has counted drugs for a while, you learn that turnover for some of these drugs is 90 days plus, and you want to rein that in. You want to get to 60 or 45 and 30 days. Can you get extended payment terms or better pricing from your vendors? These are all things that play into your goals, but can also be measured by comparing with your benchmarks. And so as you start implementing new strategies and gathering data and learning more about the health of your inventory and your business, your inventory manager is probably going to come up with some new ideas, and you're probably going to come up with some different targets, and that's fine. It's good. I think that's a good sign if you're changing and evolving, because inventory management is not a static cookie cutter thing, and as much as we would like it to be. So you've just got to stay flexible and stay open to some of those things as they come up. So to get the wheels turning, and because we've gone over a lot of stuff really fast, I put together this roadmap checklist type document. And if you haven't received it already, I know Mike's going to send it out to you. So this basically just recaps the stuff that we went over today. And it's something you can spend some time with and work on with your purchaser, and just to give you kind of some guidance as you try to decide what you want to tackle and which way you want to go with some of this inventory management stuff, because it's a lot, and it can be overwhelming, and you can go down 15 tracks at once and not get anywhere, or you can pick a couple and really make some progress in a short amount of time, honestly. So that's just that in a nutshell. I guess it'll be, I don't know how big it is on your screen, but like I said, you'll get a PDF version so you can work through that. And if you've got any questions at all, I'm here for you. So you can
We've
take
got
down my
some
information.
questions, and so I'll ask people if they have any questions, just to use the Q&A button there. And I'll start at the beginning. So no place better to start than at the very beginning. Somebody just said, what are the typical items when we're talking about cost of goods? What are the typical items that you're seeing in that? And the person made a comment. It's a very good comment. I find a lot of times that there are several items that others, including cost of goods, that could skew the numbers.
Yeah, absolutely. So what we do in the practice I'm involved with is there's cost of goods sold and there's cost of professional services. And the cost of goods sold includes just your drugs and supplies. So it includes, any pharmaceuticals, it includes your vaccines, it includes fluids, it includes syringes and needles and bandage materials, those types of things. It doesn't include shavings or, feed. It doesn't include those types of things that are in there for hospital care for inpatients.
Now, how about lab supplies?
Yep, that's included.
But not external lab supplies, or not, not acute, that cost, but just the internal lab supplies.
Yeah.
Great. Next question, and this goes back when you were talking about doing random spot checks. And the question is, what period would you sample? Would you do a month, a year, weeks? How do you like to do your spot checks?
So when we do, it depends on what you're looking at. If we're doing just spot checks on inventory levels, that's done on a weekly basis. In some cases, we do it on a daily basis. So if we're a clinic that has a lot of inpatients, horses that are on fluids, things like that, fluids are something that disappear quickly if you don't keep a good tab on them. So we do fluids daily. Most of the drugs are counted weekly, but we don't look at things like turnover and those types of metrics except for quarterly.
Yeah, so I was going to say, I know with my own practice, there are our top, let's say, 8 items of our AA items. We're going to categorize the items that we sell the most and have the most value. We count those on a weekly basis because it really helps us identify ones that we have not built or transfer issues. But typically, it's what we haven't built. And it's much easier to remember when we haven't dispensed a high cost item after a week as opposed to over several months. And it really makes sure that everybody in our organization knows that billing is really important.
Yeah.
Sheila,
along those same lines,
yeah.
it's very important that the inventory manager, is aware and kind of has, in the back of their mind what some of those key items are. So, if it is after hours or something like that, and someone comes in and grab them, they're doing visuals and checking, okay, where did that go, knowing where it goes, so we don't have to have such a large quantity on the shelf, and knowing, how quickly we can get it in and things like that.
So the next question is, how many turns would you want for your top 50 items to have per year? If you're aiming for a cost of goods of 20%, for example, to allow for the many purchase of supplies that aren't sold, lab costs rather, supplies. So what is your recommendation there on turns in a year?
Our goal is for everything across the board, 12 turns or 30 days to turnover for everything. And that's just because of the billing cycle and the amount of money that we want or don't want tied up on the shelf. So if we have everything turning over in 30 days or less, then we're pretty comfortable that we can, if we're on top of our billing and our collecting, we can buy it, use it, pay for it, or collect for it, before we have to pay for it.
Yeah. No, I think that's really the goal. That's an astounding number for an equine practice. So kudos to you. And I should have interrupted you when we were talking about it, but somebody asked, can you explain what a closed pharmacy is? And I have a question on that as well.
Yeah, so a closed pharmacy is essentially what it says. It's a room where the inventory manager sits. They have all the inventory there with them under lock and key. I mean, you're probably not going to have all of your fluids there, anything that's in pallet quantities, but as much as you possibly can keep locked up, you do, at least of the things that you're tracking. So we're not probably counting and tracking syringes and needles. Those maybe don't need to be in the pharmacy that's locked, but all of your drugs definitely we keep in there. Things that are high dollar, high volume things like IRAP, PRP, those types of kits. The vaccines are in a fridge in a pharmacy. We keep it locked just to prevent stuff from walking out the door and disappearing, because that actually probably contributes more to your cost of goods than the price you're paying for your drugs. So it can become a disaster in a hurry if you don't know where that stuff is going, and if you don't have a system. If you have an open pharmacy but everybody's really good about saying, I'm taking this quantity on this day, it's going to this horse, or whatever the case may be, if people are really good about recording what they've taken and used, then it's maybe another thing, but generally that's not the case.
So I'd ask both Sheila and you this, because another question is, if somebody says, we have a small clinic, we don't have a closed pharmacy, how do we stay on top of the pharmacy? Do you have any tips on that to help this person?
I would suggest if you've got somebody that can dedicate time to that pharmacy. I know a lot of cases where it's a small clinic, you don't necessarily have somebody and you can't justify having somebody that is just for that role entirely. But if you can give somebody some time, part-time or whatever it is, to focus on the goals that you want to put in place there, and then make sure that you have the support of the staff around them, you can get it done. It doesn't have to be, especially in a small pharmacy where you maybe only have 1 or 2 doctors, it doesn't make sense to have somebody that's, they don't need to be policing it all the time. So, but if you know what your goals are, they can dedicate some time to that.
And, you know, Danika touched on something very big there, and it's the support and using all of the support staff. So you have one person who may oversee it and be responsible for, but this is where knowing your key items, what you're watching for on a weekly, and in this case, it may be, you know, bi-weekly that you're watching them. And if that individual doesn't have the time to do it, you know, on this day, they may be assigning someone to do the inventory checks on those items. And, you know, so it's a team approach.
Yeah, and this is where your data plays a good role too. If you know who's using what or how much is transferred to which doctor, and you can show them the numbers, say this is what went into your inventory in the last quarter or the last month, however tight you're drilling it down, and say this is what you billed of that inventory. That knowledge is power, and most don't realize if they're not billing for everything, or they don't realize the gap that exists between the inventory that's been transferred to them and what they've billed. So the numbers really speak volumes, way more than somebody just like preaching and nagging and saying, we got to do this, we got to do this, we got to do this. If they can see numbers to support why we're trying to do this, that makes progress happen a whole lot faster.
Yeah, I find when you can tell the practice owner that you have X amount of dollars or money tied up on the shelves, and if you didn't, you would have this in your bank account, they're much more open to changing their inventory systems.
Yeah.
Speaking of systems, another question is, what systems do you use to identify reorder points and reorder mounts that need to be changed due to seasonal changes, and how often do you run that system?
This has been an endeavor. I've tried for 5 years to find inventory software that does this completely and does this well, and I haven't found it yet. We have invested a lot of money to try to build it, and it requires a whole lot more money than what we have. So basically what I do is it's a hybrid of the inventory reports that our software generates in terms of purchases and transfers and what's been sold, and an Excel sheet that I just built. And it shows over time, we do, you know, weekly counts. It shows what the counts were for each product every week for whatever the time period we're looking at, which is, I keep a running sheet for a whole year, but we analyze it quarterly. And when you can compare what your average inventory is and factor that in with your purchases and the time period, you can come up with turnover numbers. And so with those turnover numbers, we can look at and say, okay, we're overstocked or we're understocked or we're just right. And you can play with those numbers and see where those numbers should be to turn over in the time period that you're targeting. So you know whether, you know, we've got too much on the shelf, the average inventory on the shelf is just too high. If we lower it, it'll be just right. And you can set your mins and maxes and reorder points based on that. It's kind of a workout to get there. It takes a lot of data entry, or a lot of data aggregation, I guess is maybe the more appropriate term for it. But it's not a big deal. It's something that your inventory manager, they just get used to. You know, once a week I do these counts, and then they hand those counts off to me and I do all the analytics for it. But you know, all those formulas and stuff, they're all out there in Google land and
Yes, for sure.
whatever.
I found the best way for me is I just went to my main distributor and said, send me an Excel sheet per month of what I bought. And they were able to run that in, you know, 20 seconds. And from there, I just said, okay, here are my busy seasons. And I figured out what is the minimum I want to have? What's the time period for a minimum? And what's the maximum? And I was able to make my own. And so I knew for a common product that if I sold 24 in a 12-week period, I sold 2 a week. If I wanted to have 1.5 weeks as a minimum stock, I'd have 3. And if 3 weeks is my maximum, I'd want to have 6. And then we can just really look at every one of them, and they were tagged that we knew this is the minimum or the maximum. Because yeah, I agree with you. The software systems that we have in vet medicine aren't up to job.
Yeah. Yeah. And it's a lot, but at the same time, it isn't. You know, it's how do you eat an elephant one bite at a time? And
exactly.
yeah. And as you get those systems in place, it's just another day.
Yeah. I have another question. It's a big question, so maybe I'm going to rephrase it a bit. But they asked, what's the process or the roadmap that you would use to start from scratch to implement a software system to track inventory. I think you sort of talked about it a little bit now. Maybe there's some key things you'd want to start first, because I think we could probably spend 2 hours just talking about this.
So are we talking about a system for like strategy, or are we talking about getting inventory software up and running?
I think it's the inventory software, and I think most practice management softwares do have a good system, but it sounds like you augment yours too.
Yep. Yeah. So the first thing is just making sure all the purchase invoices are put in, and depending on your software, that can be a little more complex than it sounds. Some of them, the software we use, for example, has everything from purchase requisitions to purchase orders to purchase receipts to purchase invoices, and each one of those things does something different. So one of those, like the purchase invoice, updates the price in the system, whereas the purchase receipt updates the stock level. So you just got to have a good understanding of how your software works there. But step one would be to make sure that you have all your purchase invoices entered into the software. And then that's going to give you your purchasing report data that's really invaluable. You just got to have that. And then from there, I think it's really important to know where your inventory goes as it moves through a clinic. So the hospitals that I work with, nothing is billed out of a pharmacy. The only transactions that have to do with a pharmacy are the purchases that come in and the transfers that go out. And so then from the secondary locations, which is what I refer to as anything but the pharmacy. So if inventory it's received into the pharmacy, but then it goes to a vet's truck, or it goes to a surgery room, or it goes to a treatment area, or to the hospital, wherever it is, there's a paper trail in the system that shows this went there. And each of those secondary locations, they can only receive inventory from a pharmacy, or they can bill it to an end client. And so once you have that in place and your transfer system kind of outlined, then it just kind of follows along wherever you need it to go. And you can generate reports based on that. So then you know what went where and how much, and you can tell, was it billed from that location or was it not? And that was the biggest thing for us in identifying the inventory that was disappearing and where it was disappearing from, and who was responsible for it. And sometimes it's not that easy. So like I'd mentioned before, the hospital is a black hole. If inventory was being transferred to a hospital and billed out of there, you don't necessarily know what doctor it's under. So it's a big part of this is just identifying where the issues are and then building a plan that works for your clinic to rectify that issue.
Okay. Another question is, with shrinkage, how often would you compare amount purchased with amount sold, and what period would you search for?
We do quarterly.
Okay. Next question is, you mentioned a 25% benchmark, and I think the question this gentleman asked, shouldn't we be building a target based on where our revenue comes from? More or less product versus service revenue, and how that really compares to our pricing markup strategy. So some practices may be too high, 25%, or maybe too low.
Yeah, I mean, it definitely varies by the practice and what that practice, what their demographic is, what type of vet medicine they're practicing. It definitely varies. There's some clinics that I work with that are down at 18%, and they, one of the big things that sets them apart is they don't really stock inventory. They send a lot of stuff through an online pharmacy. And so there's so many variables that will affect that.
And then another question is, in terms of the Cubex inventory controlled substance vending machines, do you have any experience with that, and how valuable do you find their system?
Yeah, actually, we had one of our Brazos Valley clinics had a big Cubex system, and they just got rid of it, and actually were able to get rid of it just because of the inventory systems that we've put in place to be able to track the flow of inventory through software or through the clinic. There were some glitches with the Cubex, I think, in communicating with their inventory software, and so they were having to there was some redundancy in the reporting. They were having to pull reports from the Cubex and having to pull reports from the software, and then trying to line them up. And, there were definitely some advantages to it as far as knowing what inventory was going where. but ultimately they were able to get away with it, or get away from it, and save the money
Right.
that they were spending on that system just with some pretty simple management.
And then the final question is, what system do you use to regulate the quantity on hand, ordering of supplies which are not sold? So how much are the overall turns per year affected by this? If your reorder points for the pharmacy are set to 12 turns per year.
I'm not sure I follow. Can you repeat that?
What system do you use to regulate the quantity on hand that are not, or the amount of supplies that are not sold? So I guess that just ties into your overall inventory turns, then, I guess.
Yeah, so like we're talking about stuff that you have on hand but you don't go through frequently,
Yes.
and how to gauge how much of that to keep on hand.
Yeah.
Yeah, it ties back to just having a system of counting is so valuable, and in some ways it seems kind of archaic, and I get that, but you learn so much from counting your inventory, and even if it's just a sample of your inventory. Like, we started with our highest volume drugs because we figured that if we can figure out what's happening and what the behavior is around our high volume drugs, and we can make any corrections needed there, it just spills over into everything else. And that's essentially what happened. And so once we got those under control, because those were the things that made the biggest impact on the numbers, then we were able to look at things like stuff that you maybe don't stock a lot of, or stuff that, like you're talking about, and you can adjust from there. But if you've got the counts and if you've got something in particular you're wondering about that maybe isn't in your high volume drug realm, you can still track it. You can pinpoint that and track it and just see how quickly is it moving, what does the turnover look like for this, and then you can adjust from there. And you don't have to do it long. You can do it for any period of time that you want. You can do it for a month, you can do it for a quarter, you can do it, and you can simplify it even further and look at what was our beginning inventory and what was our ending inventory, and you're not exactly taking into account the transactions that occur in between, but it can give you a rough idea of where you're at and how much is sitting there not being used, and just adjust from there.
You worry about the supplies or things that you don't necessarily bill for?
Sorry, can you say that again?
Do you worry about just the general supplies, things that you don't bill for?
It depends on where they fall. So when I run these reports for what a clinic buys, that's based on your inventory software, it'll show everything you've bought in a time period if you've entered your invoices accurately and you're up to date on it. But it'll show everything from stuff that's high volume to stuff that you've bought twice and maybe spent $30 on throughout the year. So it depends on where it falls on that scale is how much we worry about it. But we do look at it, especially the stuff that's higher on the list, that's a high volume thing. We do look at it and say, okay, this is costing us X number of dollars, and it's not something that we want to just give away. So make sure that we are capturing those costs, say in a bandage code or an injection code or whatever that might look like, just to make sure that the cost is recouped there. It may not actually bill it and pull it out of inventory the way you might like it to, but as long as the cost is recovered, you're a step in the right direction.
Yeah, I think cost recovery is a big part.
Yeah.
Danika and Sheila, I want to thank you. We've been going on for almost 50 minutes. We like to keep our webinars short, but boy, we've had a lot of information, great questions. Thank you very much. And we will be sending out a copy of the PDF that Danika was talking about. We'll either get that later today or tomorrow. So thank you all very much. And there will be a recording of this that's on our veterinary resilience guide if you want to share with any colleagues or friends or anybody else in your office that wasn't able to attend this live. Thank you very much, both of you.
Thank you.
Thank you.